A fabulous day to everyone. My name is Swarna Kalyan. I'm an associate manager and have been with PhillipCapital for the past 16 years. I'm an independent financial advisor. I provide services to my clients in terms of insurance planning for both personal and corporate insurance, investments, managed accounts, and security wrap accounts. My main focus is to bridge the gap between have and have-nots for my clients with proper financial planning and advice. Today, I would like to share with you how do we sail through an VUCA environment. What is VUCA environment? VUCA is an acronym that was coined by the Harvard Business Review, which stands for volatility, uncertainty, complexity, and ambiguity. The current pandemic is a classic example of an VUCA environment. Taking the current environment, we see volatility in the markets which do not necessarily correlate to the actual financials of the listed company. There are also sectors that have been affected by the complexities and the ambiguities about when the vaccine will be available and allow businesses to function in a regular basis. Some common unknowns are: how would the US politics affect the Asian market? How does the absence of a travel industry affect its related businesses? What is the correlation of unemployment to the financials of the company? Which country to invest and how does it affect your portfolio? What or when or who has the vaccine? When will the vaccine be available? How will it be distributed to the 6 to 7 billion population of the world? All these contribute to the VUCA environment. In my view, when there is proper financial planning, according to the fundamental principle, it becomes easier to manage any unknown environmental impact. In other words, the impact of the external environment becomes less when proper financial planning is done. I will call it sail, for you to sail through the troubled waters. So what are the steps to follow? SAIL, S-A-I-L, S stands for safety net, is basically managing risks. Risk management in personal life is insurance planning. We all need to have a cover for ourselves. Personal risk management is to cover for health, critical illness, long-term care in the case of disability and inability to work, personal accident and death benefit to cover for the family. For businesses, risk management is basically key man insurance, company-related insurances that are essential and compulsory in some cases. Therefore, the first step is to have a safety net. A is asset allocation. It is essential not to put all the eggs in one basket. When there is uncertainty, it may affect a particular industry. For example, if someone was very bullish on the tourism industry, look at what the whole industry has become today. Or what would happen to his portfolio? It is certainly going to suffer a loss. Diversification is key. Proper asset allocation is essential. That is to know where to diversify your money, such as fixed income, equities, currencies, cash, gold, real estate, and the dividend portfolios. Asset allocation is very personalized. It is not one size fits all. You cannot follow what your friend is doing, as the needs and risk appetite are different for everyone. I is for investment. we call it as smart investment. It is highly impossible to time the market. Even for people who watch the market on a daily basis, it is still not possible to time the market. Although we may know the indication of a bear or a bull market, no one can predict when is the bottom or the top of the market. Investment with time in mind is a smart investment. You go into the market consistently, irrespective of the top or the bottom, to achieve an average price. This is called dollar cost average. I always tell my clients, the most expensive commodity in the world is time. There is a saying, the best time to sow a seed is 20 years ago. And the second best time is now. L for liquidity. We need to make sure that we all have liquidity of 3 to 6 months to cover our expenses. Why do we need liquidity? To protect us from the unknown risks of job loss, ill health. You can decide to keep it in the savings account, or you can put it in a money market fund. At PhillipCapital, we advise our clients to use the excess fund option in the firm's trading account to park their excess monies in money market fund that can be withdrawn anytime. Why money market fund? Basically, it gives you slightly better returns that you will receive from a savings bank. You can also know, we all know that inflation erodes the value of the money, and it would be better to get some returns on your cash. And to summarize, SAIL is about safe asset management, asset allocation, smart investment, and liquidity. You can always connect with me for your very own customized financial advisory process. Thank you for listening.